Tesla looks weak right now, but I think it's actually building its next dominance phase. Hey everyone, Ken here. Today, I want to break down something that looks confusing on the surface, but becomes very interesting once you connect the dots. Tesla's stock is weak, margins are under pressure, but at the same time, investment is accelerating, and some strategic moves don't seem to line up. So in this video, I'm going to walk you through what's really happening behind these signals, and more importantly, what this means for long-term TSLA investors. Let's start with the current reality. Right now, Tesla stock is hovering around the mid 300s with very little movement day to day. But zoom out, and the picture gets more serious. We're potentially looking at an 8-week losing streak. On top of that, a death cross has formed, where the short-term moving average drops below the long-term one. Technically, that's a bearish signal, and it's not just the chart. Margins are clearly declining. Tesla used to operate at industry-leading profitability, but now those margins are being squeezed. So if we summarize this phase, it's simple. The stock is weak, margins are down, and investors are searching for the next catalyst. Now here's the key point. Tesla is not just any stock. It's a future expectation stock. People don't buy Tesla for what it is today. They buy it for what it could become. And when that expectation weakens, even temporarily, the stock tends to weaken as well. That's exactly where we are right now. The big question investors are asking is this: what's next? So let's dig into one of the clearest signals we have right now: cost. Tesla recently added a new battery supplier from China. And this isn't just any supplier, it's a lower cost manufacturer. Now, why does that matter? Because batteries are one of the biggest cost components in an EV. If you can reduce battery costs, you can significantly reduce the total cost of the vehicle. And that tells us something very important. Tesla is actively trying to lower costs. But I don't think this is just about saving money. This is about positioning. By increasing the number of suppliers, Tesla gains more negotiation power. It reduces dependency on any single partner, and it creates flexibility in pricing. In other words, Tesla is preparing for a more competitive environment. This is what I would call a shift. Tesla is moving from an innovation-first phase into a scale and efficiency phase. And that's not a sign of weakness. That's what mature companies do when they prepare for the next level. Now let's talk about something even more interesting: the so-called cheap Tesla. There were reports that Tesla is working on a smaller, more affordable SUV, something like a Model 2. But then, Tesla China quickly denied it. And to me, that's where things get interesting, because the timing of that denial feels a bit unusual. It came almost immediately after the reports. So the question is, are they really not working on it? Or is this something they're just not ready to talk about? I'm not going to pretend we know the answer, but here's how I think about it. From a market perspective, low-cost EVs are absolutely necessary, especially in China, where price competition is extremely intense. Tesla knows this. So even if they deny it publicly, it doesn't mean nothing is happening behind the scenes. This is what I call the invisible zone. And historically, that's where the biggest opportunities tend to come from. Now, let's zoom out and look at the bigger picture. While all of this is happening, Tesla is also making massive investments into the future, specifically Optimus, the humanoid robot. Tesla is expanding its facilities for research and development and even preparing for potential production at scale. This is not just a side project. This is a long-term bet on a completely new business category. But here's the challenge. Right now, Optimus doesn't generate meaningful revenue. It's all cost. So from a short-term perspective, this puts pressure on margins and earnings. And that's where things get complicated. because Tesla is doing two things at the same time. It's trying to optimize costs in the present while investing heavily in the future. This creates a gap. In the short term, the numbers don't look great, but in the long term, the potential is massive. And that gap is exactly why Tesla feels so difficult to evaluate right now. It looks inconsistent. It looks like the strategy is all over the place. But I don't think that's what's actually happening, because if you look carefully, there is one area where Tesla remains extremely strong, and that's infrastructure, the supercharger network. Tesla is expanding its charging network in places like Ireland, and in Canada, it continues to receive high marks for reliability and usability. And this is more important than many people realize, because EVs are not just about the car, they're about the experience, charging speed, availability, convenience. This is what defines the real user experience, and Tesla owns that layer. So let's put everything together. The stock is weak, margins are under pressure, Tesla is cutting costs, the low-cost EV strategy is unclear. At the same time, they're investing heavily into future technologies like robotics, and their infrastructure remains strong. If you look at these pieces individually, it feels disconnected. But if you step back, there's another way to see it. Tesla is not lost. It's in transition. This is not a phase where everything is clean and easy to understand. This is a phase where multiple strategies are being tested at once. And that's why it feels messy, but that's also where the opportunity is. So here's my perspective. I don't think now is the time to look for a clear, simple conclusion. Instead, I think this is the time to understand what's actually happening beneath the surface, because Tesla is not just executing a single strategy, it's building something, and that process is still unfinished. So the real question is this: is Tesla getting weaker, or is it preparing for its next phase? If you're a long-term investor, that's the question that matters, not what the stock does this week, not even what happens this quarter, but what Tesla is becoming over the next decade. All right, that's it for today. If you found this helpful, make sure to like and subscribe. I post Tesla insights like this every day. And as always, let's keep thinking about the future. Thanks for watching. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.